Good morning, ladies and gentlemen. Welcome to Ags Transact Technologies Limited Q1 FY23 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on beliefs, opinions, and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be no opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ravi Goyal, Chairman and MD, Ags Transact Technologies Limited. Thank you, and over to you, sir.
Good morning, everyone. Very warm welcome to each one, and thank you for joining our Q1 FY23 earnings call. On this call, I am joined by our CFO, Mr. Saurabh Lal, Mr. Stanley Johnson, our Executive Director, Mr. Shailesh Shetty, Managing Director of Secure Value, and SGA, our Investor Relations Advisors. The quarter that went by witnessed several tailwinds on the macro level. The country's economy began to open as a result of receding impact of the pandemic and subsiding geopolitical tensions. This has led to an increase in mobility, greater spending, and thereby an increased cash in circulation. I am delighted to share with you that we have started the financial year on a positive note with Q1 FY23 EBITDA growing at 35% on a year-on-year basis and 50% growth rate on quarter-on-quarter basis. Our profit after tax stood at rupees 192 million in Q1 FY23 against the loss of rupees 288 million for Q1 FY22. Our total income stood at rupees 4,272 million for Q1 FY23 as against rupees 4,135 million for Q1 FY22. My colleague Saurabh Lal, our CFO, will give you a detailed update on this financials after my speech. Overall, our business continues to be on a growth trajectory as reflected in our operating business performance in the quarter, which would substantiate our overall FY23 performance. Our endeavor is to deliver a double-digit growth in the revenues and a higher profitability in FY23. In fact, we are targeting our highest ever PAT in FY23 and will continue to sustain our EBITDA margin of 25% plus. As of June 30, 2022, Ags 2023, Ags had installed, maintained, or managed a network of approximately 73,179 ATMs and cash recycling machines. We provided cash management services to more than 44,300 ATMs through our wholly owned subsidiary, Secure Value India Limited. We installed over 241,000 merchant point of sale terminals and approximately 48,500 cash billing terminals. We have also automated 18,000 petroleum outlets and installed more than 89,100 color dispensing machines. That being said, our focus is on creating one of the largest integrated omni-channel payment platform in the country by providing innovative digital and cash payment solutions to our clients across sectors. We will continue to leverage our digital payment solutions, our digital payment platform OnGo to provide payment as a convenience to corporates, merchants, and consumers through our comprehensive portfolio mix, which includes all-in-one POS and value-added services like prepaid or loyalty programs, etc. In the upcoming quarter, we are ready to roll out the OnGo app, which will enable the customers to avail and manage various online and offline payments, including fuel payments offered via our OnGo ecosystem. We are very optimistic about ATM outsourcing market, owing to a healthy pipeline of fresh RFPs from leading public and private sector banks, RBI's recent initiatives such as the interoperable cardless cash withdrawal, popularly called as ICCW, on ATMs via UPI, and setting up 75 digital banking units in 75 districts of the country by scheduled commercial banks offers a vast opportunity to AGS CTL to expand our existing business. The digital payment business contributed 15% of our total revenues from operations. It includes revenue from POS machines. The ATM outsourcing business, which works on a transaction or a fixed fee basis, contributed approximately 50% of our quarterly top line. Another 16% of top line came from AMC services and upgrades. Cash management, which is carried out by our wholly owned subsidiary, Secure Value India, is a key component of our ATM outsourcing business. Through this segment, we oversee cash management for both captive and managed ATMs, and it has contributed to approximately 15.4% to our total overall revenue from operations. Our service revenue continues to strengthen. The income from these services is recurring in nature and is supported by multi-year contracts. Our long-term relationship with our customers across industries puts us in an advantageous position for our new business and cross-selling opportunities and enhances our market reputation. We will continue to leverage our key strengths, technical capabilities to innovate and offer customized payment solutions across value chains, which would further contribute towards strengthening of the overall payment infrastructure in the country. Now I would request my colleague Saurabh Lal, CFO of Ags Transact Technologies, to share the financial highlights of Q1 FY23. Saurabh, over to you.
Thank you, Ravi. Good morning, everyone. Let me just take you through the financial performance of Q1 FY23. In the quarter that went by, the total revenue of the company group stood at, it's a group revenue, stood at 4,272 million versus 4,136 million for Q1 FY22. Overall, our performance in the quarter saw improvement revenue come from payment solution segment, which covers ATM outsourcing and the digital business. So on those fronts, on the ATM outsourcing, we continue to position ourselves as one of the leader in the market, where we are managing more than 32,700 plus ATMs and CRMs on and behalf of various banks. Similarly, if you see from the quarter-on-quarter performance, this number on the CRM side has increased in this quarter as well as by approximately 186 incremental CRMs that we deployed. This number stands now at 4,258 numbers versus 4,072 numbers. But on the ATM side, we saw a slight drop in the number of ATM deployments. This is largely because most of the banks are reworking on the strategies for extension of the branch or extension of the ATMs at the time of renewal, and they're putting more focus on various CRM type machines. Having said that, if you see on the POS side, we have continued to deploy more POS. We have our total POS base now stand at 2,41,064 POS versus 2,36,588 at the year end of FY22, which means an incremental POS of 4,476 POS machines. And this was again largely driven by the incremental POS of 2,878 POS, which we have deployed for our oil marketing contract with all the three major oil marketing companies. Similarly, if you see the other KPIs that we track, like this, after the deployment of this POS machine, the large KPI that we track is the GTV per POS or GTV overall. So we saw overall increase in GTV value also. Our GTV for this quarter stands at 68 billion versus 63 billion, which was in the last quarter, or I would say sequential quarter. Similarly, the POS GTV, which is now stood at 53 billion INR rupees, which was 49 billion INR for the last immediate quarter. So these are the few large KPIs that we track from the performance metrics of this business. Similarly, on other two business verticals like banking automation solutions, where we are the OEMs of the machines and we sell those machines and we run those life cycle contracts for those machines in the form of AMC revenues and service. That continues to be a very, very consistent performance for us. We have delivered approximately 500 million of revenue in this quarter itself, even though it's the first quarter where we have sometimes seen a lower number because of the POs and other orders are in the process of getting finalized. But we have seen a strong performance of that also. Other automation solutions, which constitute our three major business segments, which is retail, colors, and petroleum. There also we saw service revenue continue to be consistent as compared to what we have delivered in the last financial year, or I would say in the last quarter itself. On the product side, we are awaiting certain orders and everything, and we believe that order will continue and it will come over a period of next few quarters.
Where did the GTV on POS for OMC stood? If you can give some idea on that.
GTV per POS you are saying?
For OMC.
For OMC, the GTV right now stand at 53 billion INR as on quarter 1 of FY23, which was 49 billion in the quarter 4 of FY22. So there has been increase of 400 crore approximately in the GTV value that we have transacted in the Q1 of FY23 versus Q4 of FY22.
Okay. And my second question is that would you say that this quarter the POS deployment has slowed on sequential basis? If it is correct, what caused this?
So on the POS deployment, we have an incremental deployment of around 4,476 POS machines. If I split this into two parts, one is the deployment of POS for the oil marketing company that stood at 2,878 POS machines. So that POS deployment continues to grow. But having said that, since the order books that we carry from all these three oil marketing companies give us a larger visibility to deploy more POS. But considering that as now we have almost covered 50,000 POS machines in the market. So at the same time, the business and the other teams are strategically looking out for the POS deployment where we should get an incremental revenues also. So that is how we are now planning our deployment and continue to put the deployment. Like we have deployed 2,878 POS machines this quarter, and our incremental GTV for this quarter is also 400 crore, which is 4 billion INR. So if you see the per POS GTV for this quarter is, I would say, is very, very high as compared to overall GTV. So I think the strategy for the company is to ensure that all the POS machines should get deployed, at least one machine at each and every retail outlet, so that we should start getting those revenues. And wherever there is a demand for the POS machines, so we are putting up the additional POS machine on a basis of that we should get a higher revenues also. So this is what the strategy is. But yes, we have a target to close this contract with the deployment of all these POS machines, which still gives us the visibility to deploy at least more than 20,000 POS for further basis those contracts that we have.
All right. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Sanjay Avadramani from Envision Capital. Please go ahead.
Yeah, thank you for giving me this opportunity. So can you tell me what is the current order book which we are holding at this moment for FY23?
With respect to order book, I'll just take you through the businesses that we have. We have one of the major businesses called Payment Solution business, which covers two businesses. One is from the ATM outsourcing and cash management, and the second one is from the digital business, which covers deployment of POS solutions and other acquiring solutions and the onboard solutions. So from the cash management and ATM management business, the order book basically grows along with the number of ATMs and other deployments that banks and other financial institutions have their strategies in mind. So basis that, we believe we have a strong position in the form of deployment capability and everything. From an order book perspective, generally it's a running contracts that we have with the banks wherever the incremental deployment is required, either because of their branch expansion or their corporate relationships or their other incremental deployments, or basis the debit card issuance, basis the branch cards and everything. So we continue to get those shares. But having said that, banks have a clear mandate. I will ask Stanley to also further add to this, that banks are aggressively looking for expanding their cash recycler deployment this year and continue to do it for subsequent year also, where we see a continuous deployment and growth in the CRM over a period of last 1 or 2 years also. And we continue to be part of that journey with the bank. The second one is the cash management business, which is happened under our subsidiary Secure Value India Limited. There also, since Secure Value happens to be the company which is compliant with all the regulations and guidelines on all India basis, which came from regulators like RBI and the Ministry of Home Affairs, we continue to garner that market share. We continue to garner the higher profitability. Now, over a period of time, we have added our capacity, we have added our platform. We are now, from an infrastructure perspective, we are fully ready with respect to vaults, lands, and everything. And now, all the incremental machines that we are adding on our portfolio is actually helping us to bring or improve our bottom line. So there also, the order book in the form of the contracts that we have with the customers, their deployment strategies and their growth plan, we have continued to be their one of the preferred partners. In case of POS machines, which is largely driven by contracts, definite contracts like OMCs, there we have a very good possibility, visibility with respect to the pending deployment of order books that we have. Like I said, in OMCs, we have almost, I would say, 50% of market share from 3 all marketing put together, which gives us the visibility of around 80,000 plus POS machines. We have deployed around 50,000 as of today. So clear visibility of another 20,000 plus or around 30,000 machines can be deployed immediately. And similarly, on the other solutions, since companies itself developing a lot of other solutions, we are working with the partners to get more visibility with respect to the deployment and the rollout of other solutions.
contract from oil marketing companies that was for the POS machines, right? If I'm not wrong.
Correct.
And
So,
what about cash
so
management?
on the, as you rightly said, on the POS side, we happen to have a contract from all the three major oil marketing companies, and we are the one of the largest deployer of this POS for last financial year. From a ATM management and cash management, we continue to be a leader as a second largest player in the market from both ATM management and the cash management. So that is how we position ourselves. From the ATM side also, we continue to be a second largest player, and from cash management also, we continue to be a second largest player. From POS deployment, on the OMC side, since those are again contract driven, we happen to be one of the largest deployer of the POS machines for the OMC segment.
This was very helpful. That's all from my side. Thank you so much and good luck.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Congratulations on good set of numbers. Sir, I just wanted to know regarding our exposure to Sri Lanka, how has it panned out in Q1, if there is any one-off expenses or any write-offs coming in this quarter?
Sure. Thank you, Vignesh. We as a company, AGS has a presence in other markets, like in Sri Lanka. So Sri Lanka happens to be one of the critical markets for us since we have an ATM deployment over there also. From our contract and from our revenue perspective, we continue to run those contracts from those countries, and we continue to run those revenues improvement because ATM is one of the critical component or critical activity in those countries as well as just like in India. And our contract is with one of the largest, I would say, one of the largest bank of the Sri Lanka market, and that contract continues to be operate as it is. Most of our expenses are in Sri Lankan rupees, and most of our revenues are also in Sri Lankan rupees. So from that perspective, the costs and everything has been taken care. But yes, there are few instances of foreign exchange transfer, or I would say certain adjustment has to be done to the financials in order to comply with the various accounting standards, where any investment done by our holding company to the subsidiary, and if it is not in the form of equity, we have to mark to market that investment. Since our holding company has given a loan to our subsidiary, that has been marked to market. So, and second, there are few payments, like we have a technology transfer agreements with some of the partners, like we have a switching arrangement with some of our partners. So there we have certain vendor payments which has to be done in the dollar denomination. So again, for that purpose also, we have to do mark to market and do the loss for that purpose. But the major point is coming, Vignesh, over there is that since the currency has been devalued quite heavily, whenever we do a translation of that revenue to their holding company, which is a Singapore-based company, or when I translate that revenue from Singapore to India, there is a translation loss, not the loss, but yes, revaluation of those revenues, which has been devalued as per currency. So we have seen a significant reduction in our revenue in the Q4 of last year, and some percentage in Q1 also. But from an overall, from a company standpoint, from a continuity of business standpoint, from the contract standpoint, we still continue to run those operations and run those contracts.
Right. But if I'm not wrong, in Q4, the currency impact was around 10 to 12 crores. If you could quantify what it is in current quarter, I mean.
So for the last quarter, it was 10 to 12 crores. This quarter, it will be approximately, I would say, in the range of around 3 to 4 crore rupees from a currency standpoint of view.
Okay, and if I compare traditionally, what would be the percentage of down business that has seen degrowth in Sri Lanka? If you can say like it's 30% down or for 20% down, what from your regular level?
If you see from the Q4, it was almost 50% down because the currency in Q4 moved from 180 to 360. It's a conversion from one USD was used to give 180 Sri Lankan rupee, and it is moved to 360 Sri Lankan rupee in Q4. From Q1 to Q1, the currency movement is around 360 dollar to Sri Lankan rupee has moved to around 380 Sri Lankan rupee. So from that perspective, we have seen a reduction in those revenues. But as I said, since our revenues are in Sri Lankan rupees and but if you see on an overall contribution of that business to my overall business, out of that 4,272 million of revenue that we have reported, approximately 100 million rupees is the revenue that we accrue from our full GTFL business, approximately. So I think from an overall perspective, this constitutes, I would say, around 2.5% of company's total revenue. So from a magnitude impact, I think the percentage is very small. But yes, considering the standalone entity that we have a devaluation of currency over there. Rest, from a business perspective, it has remained stable. The other thing which has increased, again, since everyone knows it's a part of the country where the economy goes with such a high devaluation, we saw an increase in certain percentage of rate or borrowing rate in that country also.
Right. Just confirming, so it was $1 360 rupees in quarter 4 and now it is 380 rupees, right? In quarter 1.
Yes.
Okay. Okay, right. But sir, so coming to again the same thing, value terms, our business is around 60 crore rupees and we're making around 17 crores EBITDA, but currency impact itself is 12 crores. So, I mean, as things stand, the business doesn't look much viable, right? Or we can always have a renegotiation as in where the business is done in Indian rupee, so as to hedge us naturally.
Absolutely. I think yes, since if I take the last year, definitely everyone was under view that Sri Lanka and other economies continue to be stable economies. But as you rightly said, since the currency has been devalued substantially, so our business team and other things, the CEO is definitely working with the partners and working with the customers with respect to how this loss can be mitigated and everything. But yes, the discussions are still on the table. Nothing has been concluded has been finalized as yet between the partners, the customers, the vendors, and as a company. But yes, you rightly said, those points will definitely be taken care in the form of currency devaluations and revaluations when such kind of situation happens. And we will try to work it out in the way that those should be captured in the form of in the agreement itself.
Okay. Sir, in quarter 4 we had
Mr. Iyer, may we request that you return to the question queue? There are participants waiting for their turn.
Yeah, fine.
Thank you. The next question is from the line of Bhavik Dave from Nippon India. Please go ahead.
Yeah, hi. Good afternoon, sir.
Sorry to interrupt, sir. There's a lot of disturbance from your line.
Is it better now?
Just slightly better. Please proceed.
Okay. I hope I'm audible. Sir, just a couple of questions. One is on our ATM management business. Just want to understand, there were supposed to be 2-3 regulatory advantages coming through for us on the cassette swapping and the take rates being higher on ATM transactions. Are they flowing through as per plan or have they been delayed? Because when we see our growth on the ATM management business, that seems to be quite subdued. So just want to understand, has the benefits played out or are they delayed by any reason?
So, definitely,
sorry to interrupt, sir. Mr. Dave, may we request that you mute your line when you're not speaking? It's causing a lot of disturbance. Thank you.
See our quarter 4 performance, our revenue from outsourcing used to be 1,821 million INR rupees, which has moved to 2,107 million INR rupees in this quarter, which is largely driven by all these initiatives and incremental revenue coming from all these business streams. So that we will believe that many of those revenue streams have already come into agree, And as a business, wherever we have taken certain internal discussions with the business and everything, and we believe that this will continue to grow as more and more banks will continue to increase their penetration on the cassette swap, and more banks look for providing those services in the form of RBI and MHA compliance. I think both the bodies, CLA body and everybody, are slowly working in coordination with the banks and the IBA with respect to the implementation of these RBI guidelines and MHA guidelines all across the country. And as it continues to grow, we will see an increment going further to us, both in the form of Ags Transact Technologies being the MSP for those contracts, and Secure Value, our wholly owned subsidiary, being the implementing company who is going to implement this not only for AGS, but for the various non-AGS customers that Secure Value is servicing right now.
Sure, sir. So just following up, when we see a year-on-year total revenue growth, right, it's 3%, and a large part of our business is the ATM management or the ATM business that we are into. We are growing, we are like setting up the digital payment business, which is now like a reasonable part that will obviously get bigger. But still the large part of the revenue is the ATM business. And when we look at our overall revenue growth is 3%, if the benefits are coming through, can we expect that year-on-year growth, like going ahead, like for FY23 or FY24, can reach double digits, or it seems difficult considering maybe the cash withdrawals are lower now and hence there might be some impact. I'm unable to understand why the revenue growth cannot be more than 10% if all these benefits are coming through. Because the first quarter was quite muted from a year-on-year basis, so just want to understand that bit.
So I think we started off the quarter with, I would say, a very, very strong performance from our internal businesses. How do we look? Because now we're not saying our business is seasonal in nature, but we always see the quarter-over performances are slightly subdued with respect to the overall performance of the balance quarter. And definitely quarter 2 and quarter 3 are considered to be very, very healthy quarter because of the nature of business that we have, like we have transaction, fee-based revenue, and our income is linked to the transactions, and we always see quite a good uptick of transactions happening in quarter 2, quarter 3, all over the country because of the festive nature and the spending power of the people gets increased in quarter 2 and quarter 3. Having said that, we believe that, and I think that's what Ravi also covered in statement, is that we believe that we will strive for a best year this year from a profitability perspective, and we are working and we are confident that we will definitely have a double-digit growth coming in our overall businesses. But as you rightly said, Ravi, since payment solutions constitute of one of the largest part of that growth, or I would say part of that our portfolio, which constitutes approximately 80% of overall business of the company. So those business will continue to grow. It could be deployment of these various initiatives, increasing transactions, banks requirement of CRMs, and operation leverages, and all those factors will definitely help us to improve our profitability, and at the same time, it will definitely help us to grow our top line as well.
Sure, sir. Thank you so much. That's about it. Thanks.
Thank you. The next question is from the line of Naveen Jain from Florin Tree Advisors. Please go ahead.
Yeah, good afternoon, sir.
Good afternoon.
Yes, I have a couple of questions. One on your digital business. So, this quarter or on a quarter-on-quarter basis, I think there's a marginal decline in revenues in this quarter, whereas our GTV has done fairly well, right, on a quarter-on-quarter basis. So, why a slight degrowth in the revenue in this quarter versus, let's say, 4Q?
So, thank you, Naveen. We have two major revenues being part of our digital strategy. One is definitely revenue coming from the POS acquiring business, and the second digital revenue comes from the other business verticals that which are part of our digital strategy, which is the switching solutions and transit solutions that we have. So, though the overall revenue is slightly lower than the quarter 4, I would say, from the revenue perspective, but if I distribute or I would dissect this revenue two parts. One is the digital POS revenue. So, digital POS revenue is around 463 million for this quarter 1, which was 415 million INR in the quarter 4 of last year. So there is a growth in proportion to the growth of our GTV, because those revenues are percentage linked with revenue. As my revenue grow, and as automatically my revenue realization also grow. The other businesses where I have a POS deployment and not the POS deployment, the switching solutions and the transit solutions that we deploy. We saw this revenue, which was 231 million in the last quarter of financial year 22, is at 150 million in quarter one of FY23. So there, few of our contracts, specifically with respect to metro contract, has not been executed, I would say, not been concluded in this quarter. So where we see that either they got spilled over to the next quarter, or since the concluded revenues has not come, so we have not accrued those revenues. So on the cost side, we see uptake in line with our uptake in the GTV. Other businesses, since Q1 is I would say not a subdued, but Q1 is always a contract where the contract only gets spilled over to the next quarter. So we believe they will deliver those numbers in quarter 2 and quarter 3 onwards.
Understood. Sure. Second question on the profitability. So I think in the opening remarks, Mr. Goel mentioned that this year our profitability or our profit PAT will be the highest ever. And I think the previous highest that we achieved was in the pre-COVID year of FY20, when our profit was around 83 crores. I mean, going by the performance that we have been able to deliver in the first quarter, would it be fair to assume a substantially higher number than 83 crores which we had delivered in FY20?
So I think yes, Ravi has already covered, and definitely we believe this year to be best year for us, as we are all as an organization is targeting. We strongly working towards that, and I would say we have been pushed, or I would think we have got all this thought process because of the very strong order book that we run with us, very strong pipeline that we have with us. Like we see a lot of RFPs coming in the market, which gives a lot of boost to our cash business and ATM business. The POS business is also going good. As Ravi also touched upon slightly, and not in much detail, that we are working on an ongoing strategy which will get rolled out in the subsequent quarters. So all those initiatives will definitely help us to work on to deliver on the higher revenue output and higher top line. And definitely the moment we say the high top line, and since we are a very large player in this, both the payment space and everything, so we will definitely get advantages in the form of operation leverage and everything, which will definitely flow down to our bottom line. So we as a management is definitely confident on working on those numbers, and we have been deliberated internally very, very strongly that we are working in this I would say in this direction, and I think we are confident that we should we will have this year as a best year for us.
Okay, sure. And just finally on the debt side, so where do you think you will end this year at? Because our cash flows are fairly strong. So where do you see the net debt levels by the end of the year?
So I mean, from the debt perspective, we stand at around 6,451 million of net debt as on 30th June 2022. We have a planned repayment for this year. I think from a company strategy point of view, we have estimated in a capex of around 125 to 150 crore rupees for full year down the line. But having said that, since the strong cash flows will be generated from the business that we're targeting, the PAT will definitely be strong. The depreciation is a component of that profitability and give us the cash profit. I think the debt level will be in a very, very comfortable situation at which right now we are. Any incremental debt will automatically help us to get incremental revenue, since most of the debts are supported by the contracts that we have with the banks in the form of deployment of ATMs, or in the form of deployment of POS machines, or in the form of deployment of vehicles for our security business. So I think the debt situation should be in the similar range that which we are right now. It will not grow beyond those numbers.
Okay. Sure, sir. Thank you so much.
Thank you. The next question is on the line of Amit Chandra from HDFC Securities. Please go ahead.
Yeah, sir, thanks for the opportunity. So my first...
Amit, can you use a handset mode while speaking and not the speakerphone? It's causing a lot of disturbance.
Is it okay now?
No, sir, it's still the same.
Is it okay now?
Much better, thank you.
Yeah. So my first question is on the addition of CRM. So we have added around 186 CRMs in this quarter. So if you can state the in terms of full year, what is the prospective additions in terms of number of CRMs, and also in terms of the ATM business, we have seen increase in the in the fixed fee contract side. So are we strategically shifting towards more fixed fee contracts versus transaction fee based, and is it the reason for increase in margins?
Thank you, Amit. Definitely we can club this question together in the form of the strategy which the business is right now running for this ATM business. Most of the banks where the machines are getting deployed, whether it's the ATM machines or the CRM machines. So a bank also, I think internally is working on a model where they want to make sure that the CRM machines are installed at all of the branch networks, and it helps them to automate this process. By automating this process, banks are endeavoring and banks are, I think, upgrading and discussing with their IT to ensure that these machines can perform both the function together. As the machine says, the cash cycler machine CRM, so they have the functionality to perform both the actions where they can dispense the currency also and they can accept the currency also. So it gives us this visibility of both withdrawal also and deposit to us. Wherever we are getting those confirmations and where we are discussing with the bank that machines can be used for both cash withdrawal and deposit, we are banks both are working on a transaction fee-based model as well. But wherever those machines are installed as independent machines for depositing the cash only and still not been used for withdrawal purpose, we are mostly entering into a fixed fee contract with those banks. So from a CRM perspective, I think the moment these machines become active for both type of transaction, means withdrawal and deposit, we can definitely know that withdrawals numbers in the this is our history and the current trend. And with the additional deposit transactions, we can work it out. But if the machine is only utilized for deposit purpose, we are right now only working with a fixed fee contract with the bank. Similarly, banks are also at the same time, whenever the ATMs, as you rightly said, since the transactions as right now, which ATMs working is still not across the pre-COVID level. So wherever the new contracts are coming only for the ATMs, we are evaluating both the options to go with a fixed fee contract or a transaction fee contract. But yes, the strategy is to work on the contract where it become a IRR immediately positive. By it cannot be a fixed fee contract, it can be hybrid of fixed and mixed, where we get the minimum guarantee of transactions so that our P&L does not get bleed for that purpose. And at the same time, it gives us the upside in the form of transactions. Whenever the transactions come back or certain pockets or certain locations, the transactions move back.
Okay. And sir, in the transaction-based ATMs, you said that there has been an improvement in the number of transactions per ATM per day. So if you can quantify it, like what is the average transactions happening at ATMs, and also in terms of realization, have we seen improvement in realizations also there?
Sure. So Amit, if you see on an overall basis of the industry also, we have seen, if I take you through we have started discussing on the transaction definitely from the pre-COVID period till now. On an overall industry-wise, the pre-COVID level, the transactions happens to be around 66 crore transactions or transacted on the ATMs on a monthly basis. When we reached out to March 21, which was the end of wave 1 and almost closer of wave 1, we saw the transactions back to 60 crore transactions, but unfortunately we had that COVID wave 2, which resulted in the reduction of transactions to again back to 54 crore, 55 crore level. The last data that we have been tracking and even working is that March 22 or May 22, with the transactions are almost back at 59 crores and 58 crores around. So the transactions are again coming back to 58 crores, 59 crores, 59 crores. But yes, it has still not reached the pre-COVID level. So our portfolio is also in the similar direction where we saw that almost 85 to 90% of the transactions have come back. But yes, there is still definitely a way to improve it. So that is how Stanley, who heads this business, and our internal management is working on to have more and more deployment of the CRM, which gives us the additional revenue in the form of deposit transaction, deploy and complete cassette swap or other MSA guidelines, which give the additional scope of revenue to both AGS and secure value as well, or have a contract with the bank which have a fixed fee contract so that we are not impacted by ups and downs of those transactions as well.
Okay. And in terms of the...
Sorry to interrupt. Mr. Chandra, may we request that you return to the question queue?
Okay.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, thank you very much for the opportunity. So I just wanted to understand first on the interest front. So how do we see interest cost this year overall?
So there has been a significant reduction in the interest cost of the company. Our interest cost used to be a 71, if I take it from the quarter-on-quarter basis. The last quarter, we saw the total interest cost was 719 INR million in quarter 4. The interest cost or finance cost for this quarter of the group was 315 INR million, 351. So almost we saw a 60% plus reduction. This numbers I'm talking about is taking care of the Ind-AS interest cost, which is a lease cost for both the from the lease cost of the taken into account all these factors. So we believe that our interest cost for this quarter, considering that our debt level will be in the similar range that we have right now. So our interest cost for this year will be approximately, I would say, 1,400 million around, considering that Q1 as a base year for the interest purpose, maybe plus and minus 1 or 2% from here.
Okay, understood. So it includes the benefit of that 100 crores that we have been talking about, right? I mean.
Correct. So if you see our overall finance cost for last financial year, which was FY22 was 2,500 million, and considering that current run rate, we are targeting the total borrowing cost, including this India, in fact, is 1,400 million. So there is a complete reduction of 1,100 million on an overall interest cost basis. But because you have to accept that there is a possibility that some percentage of rate hike is happening in the market. Some has been transferred by banks to us. Maybe waiting on giving us. I'm sure that's a macro factor which everyone has to take it into account.
Fair enough. Yeah, I understood. Yep, that's it from my side. Thank you very much.
Thank you.
Thank you. The next question is from the line of Avdut Joshi from Newberry Capital. Please go ahead.
Hi, good afternoon. Thanks for the opportunity. I have two questions. First, on the ESOP cost. So if we look at for the FY22 ESOP cost was around 11.3 crores, and for the Q1 ESOP cost is 3.2 crores. So I want to know how is the trajectory going for the ESOP cost. That's first.
So, sure, Mr. Joshi. So from an ESOP perspective, company issued the new ESOP scheme for their employees in the month of August 2022 last year.
Okay.
Sorry, my bad. 21. So basis that, since our ESOP options were technically available for 3 years of vesting, so by applying the weighted average cost method, we had that cost of 3/6 in the first year, 2/6 in the second year, and 1/6 in the third year. So that is how it has been equally weighted over the period of the vesting period. So that is how the cost of 11.2 crore was recognized for the last financial year. And this year, as we see, the first quarter is a 3.2 crore rupees here. But for this year, the total overall cost will be in the range of around 8.5 crore rupees on an annualized basis.
Okay. So in the next quarter, you expect it to go down further?
Go down, yes.
And what would be the quantum for the next quarter then?
So as I said, Mr. Joshi, since this ESOP were issued in the August 21, so from August 21 till next year, August 2022, the cost is approximately this. So I would say 3/6 approximately in the similar range of, I would say, the cost would be around if the quarter 2 will be around the similar range. I think from the quarter 3 or quarter 4 perspective, there will be a definitely reduction in the cost.
Okay, understood.
As I said, we issued in the month of August 21. So August 21 till August 22, we have a first year of vesting, which will be a weighted average of 3/6, basically. Means half of the cost will get accrued in the year 1. Then in the year 2, it will be 2/6, which is 1/3. And then in the third year, it will be 1/6.
Understood. And second question is on petroleum outlets. So just wanted to know how many outlets we have added and what's the plan for this year to add the petroleum outlets.
So overall, for POS deployment for the POS deployment, Mr. Joshi, from the
Correct.
So on an overall basis, we have deployed approximately around 49,000 plus POS machines at the retail outlet. The order book that we have give us the visibility of approximately 80,000 plus POS deployment in the market. So our endeavor is to close this deployment at the earliest. But I think at the same time, what management is doing and what the business is right now focusing on to ensure that we should have at least one POS deployment at every retail outlet that we own, so that we start getting those numbers and we start moving those retail outlet to those POS machines. And at the same time, wherever we have done the POS deployment, since we're running this business for almost 3 years now, we have started analyzing those GTV values of POS per retail outlet. And wherever we need to re-strategize with respect to the further deployment, put more POS machines so that the volume can increase, how much percentage of revenue is routed to those POS machines, how much is cash and everything. And at the same time, we are educating them to and encouraging them to put in more and more POS machines. So both these things are now happening parallelly. But as I said, out of 80,000, since 50,000 has been done, the larger deployment has already been done. But at the same time, we are working towards closing the pending deployment also, so that we can get the maximum benefit out of those contracts, and we can leverage those points, the POS points that we have built for various other value-added services which we have rolled out or which we are planning to roll out on those POS machines.
Okay. So 30,000 remaining, you expect it based on the data analytics, whichever is having better performance, then you will decide where to deploy it in this year itself. Is that the correct understanding?
Yes.
Okay. Understood. Thank you. That's it from my side. Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
Thank you everyone for joining us today on the earnings call. We appreciate your interest in Ags Transact Technologies Limited. If you have any further queries, please contact SGA, our investor relation advisor. Thank you so much.
Thank you everyone.
Thank you. Ladies and gentlemen, on behalf of Ags Transact Technologies Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your line. Thank you.